I'm going to show you how to use the anchored VWAP with the in-depth details on its use case and how I specifically use it. I'll also be going over some tips and tricks as how you can use this tool to your advantage. You can also skip around the timestamps below to find a specific point in the video if you wish to do so. So yeah, the anchored VWAP. What is the anchored VWAP in the settings? Well, you can find it necessarily right here. TradingView left-hand side toolbar. Click on the little arrow there and you'll find it there. People get kind of mixed up with this one, but find it, favorite it, have it hovering around your chart all the time. Once it's on your chart, you're going to have settings. This is the only one you really need to know. The source is what I have is open. Again, people have different settings, but that's what I like to use it as. It stands for anchored volume weighted average price. Same as regular VWAP, but based upon a custom price bar start point. So yeah, we'll get into exactly where you want to be anchoring that in a second, but just so you can have the settings, etc., and where to find it as well. Time frames, higher time frames. I really don't really mind where I use this tool, to be honest. I use it on all different time frames when I'm scalping on the 3-minute, 5-minute, 1-minute, 15-minute, 30-minute, hourly, 4-hour, finding big key resistance levels. It's just volume-based tools. Generally, I do use it on any given time frame, right? You know, prefer, and this tool is specific, you know, in particular because you're able to anchor it to certain points. It's similar in a sense to the fixed range volume profile, which I'll go over in another video. But yeah, I use this in a manner in which it can be used on any different time frames, and it's very, very useful in that aspect. Okay, it's great for the intraday scalps and also for those who are willing to want to swing trade with it. So yeah, I'll go over how I swing trade with it, how I scalp with it, confluences you can be using with it in that sense. So how I use the tool basically is within SR levels, so support resistance essentially is a very basic way. It's a volume based tool. I'll show you another way to kind of think of this analogy. But determining the strength of a move, determining if a trend will be ending, I think these are points which aren't really pointed out too much. You know, you can decipher if you're trending, you lose a certain level, anchored VWAP for example, from taken from a certain pivot, you can decide, okay, that trend is likely coming to an end or slowing down quite a bit. You know, you shouldn't be looking for continuation in that trend, okay? Both of those kind of tie into one. So where do I use it? Really, it's within pivot highs, pivot lows, and also essentially, you've got to be thinking about which participants are still in the market and are left in the market where their volume is kind of untested. Similar to a fixed range volume profile tool, which I'll do a video on, okay? So if we're just looking at this now on the daily time frame, basically from like $48,000 downwards, let's say prices at a current stage is down here. If we just turn this into the black pencil tool, if we're just down here, right, for example, I'm going to be taking that fixed range volume profile from essentially here. Now, why am I going to be taking it from specifically this pivot high, okay, and not, you know, way further or further back? Well, my thought process is that within this trend, for example, a lot of those participants have been kind of wiped out through this initial move, okay? And then if you're looking at it from this high, again, there's not really been any sufficient kind of move up to wipe any of these participants out, okay? And that's the scenario why I'm taking it from this high here, and therefore this kind of anchored VWAP, where volume is basically occurring and where the average volume is basically secured, is a very, very good kind of analogy to be using in that scenario, okay? Another thing to kind of note from this tool is, okay, because I'm using the open, so if we just hide all of this, right? Because I'm using the open source in terms of the settings, if I'm taking it from pivot high, I would always use the last red candle, the highest red candle, so the highest black candle in this case, because it'll take it from the open. And in the from the lows, for example, let's say I'm taking it from a low. Let's just imagine I'm doing it from this low here. I wouldn't be, because again, this move was very much retraced quite a bit, wiped a lot of this kind of volume out, but I wouldn't. So let's just say this one here, because this one, a lot of that volume wasn't kind of taken out so quickly. I'd be taking it from the last, well, the lowest point, but the highest green candle, the lowest green candle where that volume has been untested. Okay, so that's the way to kind of take the pools. Think about which participants are left in the market, where is the volume kind of untapped, and I'm going to be showing you now a few other ways in which I use this, not just from pivot highs and pivot lows, where necessarily the volume is completely untested. Now, the second way I use this is actually through the beginning and the end of ranges. So we'll start with the one which is discussing the beginning of a range, okay, the start of a range, and you do need to be able to recognize when a range is beginning, you know, even with that, whether that be a few days, a few hours, a few minutes, whatever it may be. It's very similar to the fixed range tool, okay, but I'll come to that in another video. You're going to be looking for a sideways consolidation, essentially. And this is the case we're going to be taking for now. Okay, sideways consolidation. Let's just highlight all of this. You can see you have your range high, your range low. It's very kind of set in stone. I mean, it's kind of, I'm going to be showing you ways in the future as to how you can recognize these ranges earlier on. Okay, because obviously it's all well and good now, but earlier on, how can you recognize it's actually going to be forming and take the pull from there? So what I would do is, from the beginning of this range, starting here, just anchor the tool there. And the way I'd be looking at it is when you can be using it as like kind of like a POC, right? It's just rotation wise. when you see like a move above or below, that is where you don't want to be buying necessarily above, but you'd be thinking that the range high will be coming. When you lose it, you'll be thinking the range low is coming, and that's the way I'd be looking at it, kind of like a POC. This isn't my most favorite way to be using this, to be honest, because in these scenarios, I'm much more favored towards using just a regular fixed range tool. But nonetheless, this is a way to be using it. It's kind of like a developing, moving, constantly updating POC in that sense, right? And you can be using it just to give it a sense out as to, okay, what is your bias for the day ahead? Where are you in relation to that anchored VWAP? Especially for these much more range bound days. If you wake up if you wake up and you see prices, at the bottom of, below the anchored VWAP, because this is actually updating real time, you wouldn't be thinking, well, I'm going to be shorting so aggressively down here, especially if you're in a range bound environment and you recognize that, okay? Same way, if you wake up and you're all the way up here, well, why would you want to be like longing up there? It doesn't make sense, and this place is kind of like a midpoint, right, where the POC, where the most volume is, etc. So that's kind of like using it at the start of ranges. Again, we can do another few examples on that if you don't get it. I think this is kind of the most simple one. Simplest way is kind of to think about it is use it similar to your fixed range tool, and if you don't know how to use that, I'll come out with a video discussing ranges as a whole, because that's a whole complete different topic where we can discuss open interest within ranges, CVD within ranges, and much more advanced topics. The next way that I like to use it, and kind of the final way, so we've got first of all the pivots, second of all the start of ranges, now third of all I would say the end of a range. So when you're impulsing out of a range in one direction or another. So in this case, we've actually got our range. We can use it here, to be honest. We'll do on the hourly, actually. We'll stay on the hourly. Okay. We'll remove this anchored VWAP. And this is our range. And rather than taking it from the beginning of when this range guide goes sideways, we're going to be taking it from the point here where it breaks out of the range. You can clearly see there's a large impulsive move out of the range. And we're going to be taking the anchored VWAP again. Like I said at the beginning of the video, when you're looking from lows, you want to be looking at the lowest green candle. So this one here. And this is, well, I didn't even know this was going to happen. So this is the way you want to be using it, impulsing out of a range. And why are we doing that? Because we're not looking at kind of the way the thought process behind this is all older volume. This is all older volume, okay, right? Older volume to some extent, right? And this is all new volume coming into the market in the sense of, you're breaking out of range and different participants coming in. And you want to be using their kind of the anchored VWAP as a sign of strength of that. Okay, because the second you kind of lose this level, it kind of signifies weakness within that kind of breakout of a trend. So it's kind of the way I like to use it is, let's say you're ranging. I'll do a little diagram at the top. You're ranging here, right? And you got your little anchored VWAP. You impulse down, for example, right? And you take your anchored VWAP. The anchored VWAP starts like swirling in here, for example. And then let's say let's just say it keeps coming down a bit further. Well, then let's just say it holds the VWAP, it continues, great, continue for higher prices, breakout continues, and, you don't look for this range again. But if, for example, right, this keeps coming down up here, and then price it doesn't hold it, it starts to lose it, well, then from my experience, it makes it much more likely that you come back and test this whole range again. So it can signify weaknesses, signify places you want to be hedging, all of this different stuff, signify strength, signify everything. It's very kind of powerful tool because it's based upon volume. And I think you should be trying to use it more in that sense as well. So now for some further advanced tips and also some actually lower time frame examples of this. Okay, so this is actually going to be first of all going through a lower time frame example. Then I'll be going through some advanced kind of things I've noticed and things I've kept track of. So even in current price, I'll do it with current price action. Where would I be like taking this pull from? Okay, well, I'll be thinking, well, I'll be taking it from ultimately one real location at the end of the day. I think I'll be taking it from this low. So I take the pull from this low, well, not even a pull, just one click at the bottom, again, using the lowest green candle. Okay, and I'm going, okay, well, this is support. We haven't lost it, so this uptrend remains actually intact. The idea would now be that for today's buys, obviously I've got a ton of other things I go through in terms of a checklist, but I'd say to myself, okay, once this level is kind of lost, if we lost this level convincingly, well, I'll be looking down towards actually the likelihood is that we take out the swing low again. But whilst we remain above it, and people probably getting bearish down here, it doesn't make too much sense since we're still above this anchored VWAP, and yeah, we're holding it as support at the moment, and at least we haven't lost it. So that's like one of the just an example of how I'd use it on the lower time frame. Again, this is a 5-minute chart, 15-minute chart. This is one of the tools. I probably wouldn't use it on like the 1 minute maybe, but I use it on the majority of my different time frames, So yeah, don't feel hesitant to like be using it on the 15, an hour, 4 hour, even the daily. I really do like this tool on all different time frames. Another example of this tool going into a bit more advanced tip, okay, is actually going to be looking for deviations, failed auctions above these anchored VWAPs with massive trap positions. So, for example, in this case, I remember this one quite clearly because you have to wait for pivot high to form, okay? And you're seeing this kind of downtrending move. And at that stage, when you see a massive downtrending move, I'm thinking, okay, in that very moment, I'm going to take my anchored VWAP from the very high, last red candle, okay, or the highest red candle. And I'm going, okay, well, this is resistance, resistance. This isn't really a failed auction to me. Resistance, drop. This here is what you classify as like a failed auction type move above it. I've seen this quite often, okay, from my own experience, where you'll reclaim the VWAP, and although the anchored VWAP, and this can be used like as in if you lose the level again, well then it's quite actually bearish, because what you then see is potentially a load of trap longs above the anchored VWAP. Okay, then you've lost it, and that can actually warrant again further continuation of the trend and actually acceleration of that trend towards the downside. So it's actually a very common feat. In this case, you'll see trap longs. On the reverse side, you'll see trap shorts, where, for example, you're moving up. I'll show you here actually. We've got an example coming forward. So another example of this would actually be here, where I'm taking it from this overall low here on the chart. You've seen a massive move up, and in this case here, you haven't seen actually a failed auction. Like I said, this isn't really a failed auction. But what would have been more bullish, to be honest, even more bullish, to be honest, in this case, would have been, should you have lost this level, okay, spent a tiny bit of time below it, reclaimed it, and then within this kind of span here, you would have seen trap shorts rather than trap longs up there. Trap shorts, reclaim it, and then again, even more bullish move to the upside, in my opinion, would have been valid. Again, this isn't a must, but I've seen this many times. So don't just automatically always think, if you lose it, it's going to be massively bearish, because some people do look at this. People get trapped into like this bear trap, thinking, I've lost it. Let's massively drop towards the downside, and then just get trapped in like a failed auction type move below the level before then further acceleration in the opposite direction. So be aware of that. Be tracking this type of stuff, and hopefully that's a more advanced tip for you all. So to conclude a few things, the anchored VWAP is a tool which is really used for myself on a daily basis. Use it consistently for the pivot highs, pivot lows, start of ranges, ends of ranges, beginning of impulses. Okay, and also looking for essentially just general SR levels, failed auctions below and above these anchored VWAPs. Okay, and using it in that type of way, because these are great tools in terms of trapping traders potentially as well, and general range rotation. So I hope you enjoyed, and thank you for listening.